Great. Well, thank you all. And I'm sure everyone wishes we could have added a little more time to David's discussion, but hopefully we're a good follow-up here. My name's Tom Mitchell, and I'm with Cambridge Associates, and I'm very pleased today to be joined by a lot of my esteemed peers in the advising industry, all people who are working with institutions on helping them think through their sustainable investment strategies, which is inclusive of from the advisory side, the outsourced CIO side, and also the asset owner side, where with Kirsty, who represents Wespath, where they represent some constituents who all have very strong concerns about their values and a focus on sustainability. So what I'd like to do is put out a couple of premises for my panelists to think about and react to. And what we're trying to do also is adjust on the fly, not just as this conversation has been excellent over the last day and a half. And I think what we want to do is really incorporate some of the things we heard. And we're really glad, I think all of us, to get to the point that has been reiterated just most recently by David, but started yesterday, is this is investing. This isn't something different, something unique, or something with spots on it that needs to sit in the corner. But this is making really important decisions about capital allocation. And to that end, we'd like to highlight, frame some of our comments and discussion around the idea that investing, of course, isn't linear. So a lot of you are sitting here thinking about, how do we make this work for my institution? How do I talk to my committee? How do we get constituents on board? How do we translate this to policy? How do we implement it in a portfolio? And how do we measure it? How do we learn from it? And all those things are very important. So we've highlighted here that we think that a lot of what we're doing here today and things that you're already working on in your institutions, the education component is very important. Just to talk through the ideas, the themes, the thesis for the various investment strategies that you might implement, and how to build common ground and common understanding with your diverse constituencies on your board. That's certainly logically followed by building this into strategy and ultimately investment policy, and really being able to articulate what is your purpose as an organization, what are your priorities, and what are your principles, which will help define your decision criteria around the investing. And then the fun stuff, at least I think a lot of us think, is the execution. Actually making the investments and managing the portfolios. And then the learning. And this is not something that just stops. You will have turnover on your board, you'll have turnover in your students, and there will be continuous activity around all of these things. So I think with that perspective, we're framed. Today we have DonnaSelva, who's with Prime Buchholz, and certainly you've already heard about some of her work through other speakers in Hampshire College, and folks who have been some of the earliest movers into reduce carbon in their portfolio, divest from fossil fuels, and explore sustainability in a college endowment. But she certainly works with clients across a broad range of sustainability and impact issues at Prime. Kirsty Jenkinson, who's with Wespath, which is a United Methodist organization managing assets for both clergy and churches across the U.S., and she's been there for about 2.5 years now, and brings in some perspectives that also come from working on the asset management side. And so it'll be interesting to hear her perspectives on how going from that to really managing a direct portfolio and having a strong constituent base to respond to. And then Garrett Wilson, who's with Hirtle Callaghan, which was one of the earliest movers into the outsourced CIO market. So where investors delegate the investment decisions to Garrett and his teams. There creates, I think, an interesting dynamic where you get to focus a lot on the thinking about the strategy and the policy and the communication, and then you get to go do the execution with maybe without some of the hand-wringing that comes with that. So framing that, I'll let everyone introduce themselves. I want to put out two premises. So one is the first one already here, just the construct that investing is not linear, and this is a constant and a virtuous cycle that we all go through. And the other is, and I think David really hit on this, David really hit on this in his talk just now, and we've heard it coming through, is that there's a strong investment thesis around sustainability right now. And I mean, and it's not just a short-term trade. There are global megatrends in place that we all need to be considering. So climate change is happening, and it brings certain risks, and portfolio management is risk management ultimately, but it also creates a lot of opportunities. So this is at a very high level, highlighting some of the many layers of that risks and some of the opportunities that come from that, and some things that we've already heard. Yesterday we heard a bit in the popcorn session. So Matt from Ecofin talked about the infrastructure spend, and David talked about that. There'd be a lot of dollars moving and a lot of transition happening in the economy and in industries globally. And there are a lot of opportunities for investors to learn how to participate in that and take advantage of that. Furthermore, I think in a world where we have very much low to negative interest rates globally, we have I think a consensus, whether that's right or wrong, you always have to be aware of the consensus investments, but we have low rates, low expectations, and low growth. And sustainability offers a path to combat that and somewhat overcome it. So we have to buy future growth. We have to work harder to find good ideas, and we have to be very careful and very smart in our capital deployment. So with that, I'll let it turn over to Alice and to introduce herself and maybe comment on some of your work and the premise in general. And then what I'd like to do is take us through the cycle of the education, the strategy, the implementation, and the learning.
Okay, great. I'm investment consultant at Prime Buchholz and Associates. Am I on? Can you hear me? Okay. We work with endowments and foundations primarily, and I work primarily with endowments and foundations who are interested in aligning their mission with their investments. And so I think following on what Tom said and what David said earlier, there's not only, there's a shift happening, but there's also this need for companies to make this major shift in perspective. And I think David mentioned seeing that more in companies, that there's a great book called The Big Pivot by Andrew Winston, and he speaks to three main ideas, and those are three main pressures in today's world, in the world that we face. One is the climate change and the increasingly unstable climate that we're experiencing. The second one is unprecedented pressure on our natural resources for growing demand from emerging markets, as well as just population growth and the scarcity of resources. And the third is one we don't often think of, but it's the increasingly transparent and open world we live in. With social media and Twitter, it goes across the world pretty quickly if Walmart mistreats its employees or has some issue of inequality. And he says that based on those three things, it's imperative that companies make a big pivot. The book is called Big Pivot, and that pivot, it says we must pivot in perspective so that the world and the biggest challenges that we face, those three challenges, profitably become the core of business growth. So that it's not just we're shifting to a carbon economy, but those three things make it imperative. And we often use that book as a part of educating committees because it comes from a company's perspective, and committees are often comprised of business leaders.
Great, thank you. Kirsty?
Hi everybody, nice to be with you today. I represent Wespath Investment Management. We manage about $21 billion on behalf of the United Methodist Church globally. What I find interesting as being sort of an asset owner, we do have a small institutional client business. About $3 billion of the assets are managed for foundations and endowments for United Methodist affiliated institutions. But what I find really interesting is whilst we obviously have a very strong call to respect what are called the social principles of the United Methodist Church, primarily it has to be, our compulsion is fiduciary led. So I sit within an organization which obviously has strong values and a faith-based view, but in how we think about sustainable investment, it's very much aligned with what we're talking about here, and it's just a very strong and fundamental belief that actually doing this is going to be better, not only for our constituents and their pensions, but also for the world at large and society and the environment. It's interesting to sort of go out across the US. Obviously, as you can tell, it's not my homeland, and see how this plays out with different constituents, because we get very, very different feedback on how much we should balance the fiduciary versus the social. And that's a constant tightrope that we are having to explain, that actually, first and foremost, it's to make better returns, but we'll do that as best we can in alignment with all of the values that multiple constituencies want to represent, and they are diverse. I think what we are focusing on at the moment, I sit within a 22-person investment team. We have the privilege of being very integrated as an investment team, so the investment management team as well as my team. We have joint goals. We meet regularly. We are totally kind of united in a view. That makes it interesting, but also challenging. And we manage a lot of our assets are managed by external participants. So a lot of our challenge is, well, how do we evaluate our external managers on how they are doing this, as well as what we're doing internally on regards to proxy voting, shareholder engagement, and the other elements of sustainable investment that we're talking about here. So one big element that I'd love to sort of touch on further is, how do you manage your managers? The second big issue that we're really grappling with very live at the moment is, what does a climate action plan look like, which is very comprehensive across asset classes, across engagement, across investment, across what we will not invest in. So we're really right in the throes of developing a very comprehensive climate action plan for our investments. And then the third area that I'd love to talk a little bit more about is where we're trying to increasingly actually allocate capital to areas with positive impact. We have a strong sort of legacy on positive social purpose lending, which is in community development and low-income housing, which we've got about $3 billion invested over the last 25 years. Fantastic returns in our fixed income portfolio, very low default rates, and we're looking at trying to replicate that across environmental impact as well, and so happy to talk a little bit more about that. But that's a bit about us, and looking forward to the discussion. Thanks, Tom.
Great. So I'm Garrett Wilson. I work at Hirtle Callaghan. We're an outsourced chief investment officer. It is the only thing that we do, one line of business. It's really acting as a discretionary advisor on behalf of endowments, foundations, pensions, family offices. But specifically on my role, I'm an investment specialist focused specifically on working through mission-aligned portfolios, working through sustainable investing, integrating ESG across our traditional program, and all the factors that come with that. But when I joined Hirtle Callaghan 3 years ago, one of the things that was so apparent once I started engaging endowments and foundations was, what is the biggest inhibitor to adoption of a sustainable investing strategy, integration of ESG factors? And it was, advisors are the biggest impediment. And so for me, that was right out of the gate said, wow, well, we need to break down that barrier. And I had the opportunity while I worked with Nancy Fund out in San Francisco for a little bit at DBL Investors. And one of the things she also said to me was, there is a huge barrier that sits between asset owners and the opportunity to invest in sustainable strategies. And if there are ways to knock down that barrier, we need to do that. And so I feel like as an outsourced CIO, where we have discretion on our clients' portfolios, here where we're consultants, with what capacity we work in, it's very important that we no longer act as an impediment, and we are a support system. We are acting as a facilitator for these opportunities. And so that's a really important way that I think about my role. But here in this panel, we want to talk about how can you construct a mission-aligned portfolio? How do we work with our clients to do that? And I think about it in kind of this timeline in three distinct ways. But we talked about it yesterday, but education is always the first and foremost, the most important thing. Getting everybody in that room on the same page. Better understanding what are the tools at your disposal, what do the opportunity set look like, and we're going to talk quite a bit about that. So with that, I mean, you're establishing an objective. You're then figuring out, how do you satisfy and what tools will satisfy that objective? So how do you want to report on impact metrics? How do you want to report on performance? And then they get to the execution, which is, how you're going to satisfy that objective. So really establishing, a dialogue and a conversation alongside your clients and working with them to really decide what approach do you want to take? How do you want to approach it? And then at the end of the day, how are we going to execute on that?
Great. Well, obviously, there's a lot we could cover. So what I want to suggest is we go for a bit more rapid fire on a couple things and get into the portfolio. And let's start on the education thing. I'd like to have each of you, what When you think, a lot of people here, I imagine, what I've been hearing in discussions, not only yesterday and through today, but in past IEN gatherings, is the challenges of people dealing with their committees and their boards and having people with widely divergent views around what should be happening with the endowment. So can you each share an example of a very effective strategy for bringing that conversation to a common space where people can move forward? So maybe Alice, we'll start with you.
I had a couple of conversations in the room yesterday where I am, and certainly others are still getting the argument that if you limit your universe in any way, you're going to underperform, because that's the whole, former investment philosophy around modern portfolio statistics, that you can't limit your universe. And what rarely happens is that any active manager limits their universe in some way. They have certain things they're looking for in companies. And the question often comes up around fossil fuel divestment. So we worked with Aperio a year or so ago to look at some numbers around, so what happens if you do take all those consumable fuels out of the Russell 3000, out of the US equity market? What really happens to the portfolio? And these numbers are the result of a 26-year time period. The return you can see is the same to the nearest 100th of a percent, 10.63. The volatility is up there, and it's a difference of 10 basis points, slightly more volatile without the fossil fuels. So what often you get pushback, you get savvy investment committee members who say, yeah, but all that data is time period sensitive and the market's down and blah, blah, blah. But if you look at these numbers, they end in 2013 when the oil prices were at their highest. So if you can flip back one. Yeah. So this is the experience. You can see that oil prices have been rising, they've been some up and down, but at the end, the red line is the oil prices. And they were on their way up at the end of this period. What this graph shows is what a lot of investment committee members deal with is the near-term volatility during their time on the investment committee. They don't like being subject to being way different than the benchmark. So the green on the green portion shows outperformance relative to the Russell 3000. So that when in the top half, if you did not invest in consumable fuels, you were actually outperforming the U.S. stock market. And the bottom half is when you're underperforming, and you can see that those flip around. But the range of flipping, if you look in the far left, is 80 basis points. There's an 80 basis points difference at the top level, the most difference. So it is possible to divest from the fossil fuel market if you choose to do so. I think that's an argument we often use to just show, thoughtful construction of a portfolio. It's very possible to not invest in certain industries if you don't feel comfortable with them and still get market performance or better.
Great. And maybe we'll go to Garrett, since you're still dealing more with the committees, and get Kirsty's perspective, since it's a little distinct as the asset owner side. But so knowing they're delegating the investment execution to you, when you sit down to have that educational conversation, what do you find are the most effective tactics in moving that conversation forward?
Yeah, I think once again, it goes back to looking at the whole opportunity set. So looking at, if fossil fuel divestment is a constituent pressure that you may be dealing with at a college or university, then kind of engaging the constituents. The most successful colleges and universities that we've had interactions with in thinking through these issues or addressing the fossil fuel divestment campaign or addressing alignment of mission has really been when you bring in all stakeholders, when you bring in the students, when you bring in other constituents, and you engage and you have an open dialogue. Because oftentimes, the students who are really the ones that are, banging on the door are the ones that really think fossil fuel divestment is the only answer. But that may be the issue of the day, the issue that they really want to focus on today, but there doesn't capture other issues that may emerge 1, 2, 3 years down the road that may be something else to think about. For-profit prisons is one that's kind of picked up some attention more recently, and other issues. And so when you engage the students and talk about, whether it's broader ESG integration where you're capturing other risks and opportunities within a portfolio, that is another, and really does open their eyes a little bit on the other opportunity sets that exist out there and other tools at their disposal. And so I think really for us, it's really been when you open up the dialogue and you really do engage and you really figure out, okay, what is the overall objective of whether it's constituent pressure, whether it's mission alignment, whether it's whatever approach you want to take, but really establishing, okay, what are the objectives and what are the ways that we can achieve that objective, and then how are we going to do it? And continuously monitoring that and continuously improving on that process, because it's not going to be, like we said, it's not linear.
So Kirsty, I imagine it's probably, you might even face challenges of people asking you to do more and more. And maybe it's a different conversation. I mean, what's been effective for you?
Yeah, we certainly do get that more and more, and we have been very scrutinised for a very large campaign to get us to divest from fossil fuels. We don't believe it's the right option, and we will proceed on that basis. But we are constantly being asked to, well, how about this? What about this issue? And I should say on fossil fuels, to us, it's a lot about the slippery slope of everybody has many concerns. Where do we draw the line and say, we can't consider every single concern that everybody wants to think about. We have to first and foremost sort of filter those through our investing lens and try and communicate clearly to you why we do things. And I think that's where we've been very weak, and where we need to focus our attention going forward is you've got to keep it simple. Because I remember when I came in 2 years ago and I'm like, well, we've got this policy, and I'm going to talk about this and this and this. I'm like, oh, they're going to be so dead by kind of thinking about all these minutiae. And so we try to simplify it into, there are certain companies that we avoid, some because of ethical reasons, some because of financial risk reasons. We engage, we use our voice, so we use our seat at the table to try and create more sustainable businesses, and we invest for positive economic, social, and environmental impact. So rather than having a plethora of 25 different policies, we have avoid, engage, invest. And so every time we go out, we reiterate that our strategy is about avoiding certain companies, engaging, using our weight, and investing. And that's really starting to help, I think, in how we communicate. So my two advices would be, one, try and keep it simple, although it's still not simple, I recognise that. And two, keep saying the same thing again and again and again. That doesn't mean to say that you're just not listening. It means to say, we mean sustainable investment is about better business, a bit like David was saying earlier. And I can still give a presentation and say that 12 times, and people will come up at the end and say, well, how have you compromised returns? And I'm like, oh my goodness, I need to say it better somehow. But I think part of it is saying it clearly and again.
Great. And I'll offer a few perspectives of my own. And just in working at Cambridge, I've been there for almost 10 years and helped build our mission-related investing group, and have had a variety of conversations over the years, and I think they've evolved to become better and better, particularly as the imperative is stronger to invest in sustainability. So I'm, in fact, I need to finish the panel in time so I can go to a client meeting and then get back here for lunch. But it's a client that I started working with last year, a foundation here in town, that already has an environmental disposition and a focus, but were really stuck at the committee level, where you had the classic one person on one side who's an advocate, another person who came from traditional asset management and wanted proof. So what I asked for was time. I said, look, I don't think this is going to cost you in return, but it's going to cost you in time. We need to devote time to this. So it was really actually spending time working through the thesis and the long-term view on what we're trying to do with the investments, where the world is heading, and what we need to do with their portfolio, recognizing it's harder and harder to make money. And that took about twice the amount of meetings, if you will. So just relative scale that to however you manage yours and the time you spent, than maybe with a different type of client a few years ago. So it's worth it.